Good day, empowered investors, and greetings from Hilton Head, South Carolina. It is a beautiful, beautiful day here, and I am at a great event where we're doing some learning, some business stuff, talking a lot about artificial intelligence and many, many other things in the business world, and also doing some biohacking, which is very interesting. So feeling good. You got to optimize your health and your finances. But I'm here to talk to you about your finances. If you want to know about optimizing your health, check out my other show, which is the Longevity and Biohacking Show. Admittedly, we haven't been posting a lot of episodes to that one, but there's a great library of some of the leading longevity sciences experts in the world on that show. So the Longevity and Biohacking Show. Check it out when you have a chance. Let's look at existing home sales. Now, this is a very important chart if you are watching on video. If you're not, basically this chart goes back to 2016, showing a volume of about 5.5 million home sales annually. And then it progresses up to COVID, and sales volume plummets to 4 million. And then, of course, as the Federal Reserve and the government starts pumping the money printer and pumping the money supply and quantitative easing and all of that stuff, the real estate market just goes through the roof. Now, this is not prices, this is sales volume we're talking about, but we get to a peak, according to this chart, of nearly 7 million. Now, the other charts I've looked at and the other studies I've looked at show it at just over 6 million, but this one is almost 7 million. So phenomenal, insane amount of home sales volume. And then, of course, we see the fastest interest rate increases in history, and the market just comes to a screeching halt a few years ago. Now, why is this important? And here we are back hovering around 4 million home sales per year. You know, we see this long normal stretch where it's about 5.5 million, give or take, right? Depends on the year, of course. These things move up and down. Depends on the month, of course. And that's why they show you SAR charts, usually seasonally adjusted charts, because home sales are, of course, they vary quite a bit throughout the year and the seasons. So it's better to look at a seasonally adjusted chart. Anyway, we're down at about 4 million. And I've talked about this before. It is not the first time you've heard me say this, but let me flip to the next chart here. And for those not watching on video, I took the same chart and I pasted a red rectangle that says pent up demand. Because if you look at 5.5 million as sort of the norm, and you look at nearly 7 million at the peak, right? We have had a deficit for a few years now. And that deficit is of home buyers, would-be home buyers, I should say, who didn't buy because the interest rates were too high, the market was too uncertain, whatever their reasons. Usually they just can't qualify, right? Or I should say, they can't qualify for their expectations. They could qualify for some home, probably, but they just can't qualify for the home they believe they deserve, right? And so expectations and ability to qualify and supply prices of those homes are way out of sync. And so sales volume has plummeted to hovering around 4 million. So we have now this deficit of would-be home buyers that have been waiting and waiting and waiting. And I've shown you the chart before and talked about it many times before of how many, in other words, the mortgage sensitivity. And now this is the sensitivity in a positive way. As rates come down, millions and millions of new buyers will be able to qualify for the median price home. And we've got just over 800,000 homes for sale. This is the Altos and Housing Wire data. It is not the NAR data, who says more homes than that are for sale, but they include pending and contingent sales, which aren't really for sale. We've talked about that before. And it really doesn't matter what survey you use as long as you use them consistently so you're comparing apples to apples over the years. So if you look at the data I'm using, the Altos Housing Wire data, and you compare it to the NAR, National Association of Realtors data, and if you're looking 8 years back or 5 years back, it's fine. Just use the same data at each point in time so you have an accurate comparison. Either way is fine. But really, we have just over 800,000 homes for sale. Millions of people have been waiting and waiting and waiting. I estimate this number of pent-up demand at about 6 million would-be home buyers that didn't or couldn't buy. And now that we see mortgage rates dropping, those people are starting to enter the market. Business is much better for us. I'm so happy about that. It's been pretty slow the last few years, but still okay, but just kind of boring. A very muted market that we've had. And business is definitely picking up, but boy, we see another 0.5 point drop in rates, which we all know is coming with the Fed easing and then Powell getting the boot soon. That's not too far away. So we're going to see lower rates, and we're going to see a very active housing market because there's a lot of pent-up demand in the marketplace. We've talked over the years many, many times about inflation-induced debt destruction, my trademark strategy for the last 21 years. And I wanted to show you a new way of viewing this. And what I'm looking at here is a chart that shows annual nominal versus inflation-adjusted real payments over time. Now, of course, it's important sometimes to actually think of the definition of a word. The word nominal just means in name only. It's the name of something. A dollar is called a dollar. It was called a dollar back in 1975. It's still called a dollar today, but the value of it is very, very different. This survey goes back to 1975, and you can see that the payment burden, because of the wonderful benefit of inflation-induced debt destruction, which income property offers this better than any other asset class in the entire world. And that's why it's the most historically proven asset class in the entire world with a very, very long track record. You get this wonderful inflation-induced debt destruction because that payment burden just eases and eases over time. For example, if annual, now this is annual, but it doesn't matter. The concept is the same, annual, monthly, doesn't matter the amount. The concept is the same. But here we're showing annual payments of $1,250 on the median price house back in 1975. Well, actually, this goes back to 1970, I guess, because the chart goes back further than the date you see, right? So whatever the case, right? And then we see the real value of those payments once they're adjusted for inflation. You think you're paying $1,250 a year, but by the year 2000, you're really only paying about $250. And this is why the people that own the real estate, that own the income-producing assets, just keep getting ahead over and over and over time. And by the way, of course, this is only one dimension of the beautiful multidimensional asset class that we call and love income property, the most historically proven asset class in the entire world and the most tax-favored asset class in the entire world. Okay, let's think about it another way. Inflation-adjusted real payments over time, and here we see the same kind of thing. And so we're looking at 100 as the payment, okay? And then we're looking at over the years how that just declines and declines and declines to, and you've heard me talk about it before, to $24 a month, that monthly payment. It feels like $100 originally because the dollar value wasn't debased by inflation, but over time, as it was debased by inflation, that monthly payment feels lighter and lighter and lighter. You keep writing the check every month for the same amount, but the meaning, the inflation-adjusted meaning or impact of that payment is much, much lower, and you've got it fixed. I did a speech in Toronto a few days ago. I was up in Canada, and God, I gotta tell you, I feel so sorry for Canada. Such great people and such a great country. I've always loved Canada ever since I was 21 years old when I visited there my very first time. I had a very beautiful girlfriend from Vancouver years ago, I just always loved the place. It's just beautiful, right? The East Coast and the West Coast. It's a beautiful country, but it has been so devastated by Justin Trudeau, now Carney. It's like they keep playing the same record. It gets worse and worse and they don't change anything. But that's the way the globalists and the elites are, basically controlling these politicians like puppet masters. And I gave this speech on Saturday there to a group, and I talked about how inflation just impacts your investments and how proven income property is. A lot of people there invest in cryptocurrency. And listen, I hope Bitcoin becomes a thing, right? I own some of it. I think it's a great idea, but the chances of that happening versus the very, very proven asset class for literally thousands of years of income property just aren't really a great comparison. So again, you can play with these more speculative things a little bit. And what does that mean, right? It depends on your net worth, depends on your financial situation, depends on your outlook, depends on everything. But I would limit my investment portfolio to about 10% for those speculative things. That's just my opinion. Of course, everybody has a different opinion, and I'm not, like a traditional Wall Street financial advisor. I'm a real estate guy, right? But, you put about 10% in those sort of home run type things, right? If it goes well, great. If you're investing in a speculative startup or something like that, great, right? You'll hit the home run. But don't be too greedy. Put the main thrust of your investments in the historically proven things. Not only, of course, the most historically proven asset class, but the most tax favored asset class in America. Oh, I know what I was going to say too. A lot of people at that conference kept asking me about international investing. And there is absolutely nothing keeping us from recommending and selling through our real estate referral network international properties. We can do business anywhere on planet Earth. No problem at all to do that. In fact, we get pitched on this all the time. People that are doing deals in places like Costa Rica or different countries in Europe or China and Japan, South America, Colombia, very popular, right? All of these places, right? They're saying, hey, Jason, can I offer these properties to your audience and I'll pay you a referral fee on them, just like you do with your US properties. And we have never found a deal that is good enough to offer to you, because the US is a very special real estate market in all the world. Why? Many reasons. I've talked about them over the years, but one, and probably the primary one, is that the mortgages are subsidized by the US government. And by the way, if you're listening to this, we have listeners in 189 countries worldwide. If you're listening from outside of the US, we have a very unique loan program for foreign nationals that offers a really, really good opportunity for you to own US property with very favorable mortgage terms. It is rare to have this available, but we do have it available, at least last time I checked. So reach out to your investment counselor if you're working with one already, or just go to jasonhartman.com, fill out any web form, and we'll get back to you. And our US non-toll-free number, 714-820-4200. Inside the US, 1-800-HARTMAN works as well. So that's great. Isn't it funny, by the way, when I read the book, The Rational Optimist, such a great book, by the way, you're just hit again with the idea that everything just keeps getting better. And now I'm not talking about culturally, because culturally I actually think things have gotten a lot worse. But economically, in terms of standard of living, it just keeps getting better, and we all just take it for granted. We don't appreciate it. Like, who cares if you have a toll-free number anymore? That's why I meant to say that. Because, calling the phone is basically free within the country, right? You can call anywhere inside the country for free, right? But it used to matter, right? That used to matter. And companies used to spend. I used to spend when I was in traditional real estate, and even after that, right? I would spend a lot of money on my toll-free number. And now Who cares if you have a toll-free number? It's just like a vanity number. It doesn't even matter because they can call you for free anyway. So things just keep getting better and none of us appreciate it, right? It's just kind of the human nature. And now let's talk about Marco Santarelli, Narada. Again, he was charged by the government with bilking investors out of just over $62 million. Some estimate that to be about $90 million. And he pleaded guilty on Monday in federal court in Santa Ana, California, Orange County. And he is going to take a plea deal, it looks like. His sentencing won't be until next year. We'll report on the story for you. But as I always say, folks, be a direct investor. Follow my commandment number 3, thou shalt maintain control. Thou shalt maintain control. And for those watching on video, I'm just going to show you and go over a couple of the legal documents here. And you want to maintain control and be a direct investor so you don't leave yourself susceptible to someone ripping you off, losing money because someone's incompetence, or them just taking a huge management fee off the top for managing the deal. And I guarantee this, of course, what I'm about to say, there are many, many syndicators and fund managers out there right now, people you and I both know, who are stealing your money. Okay, they are either outright stealing it or they are laundering money basically to their other entities, right? And you are getting the scraps of the deal, okay? So if you're investing with these people, watch out. Marco Santarelli with Narada, just like Bernie Madoff, he took a plea deal, so now there won't be a trial. And a lot of these people like to take those plea deals, of course, have to take their chances if they go to trial, but they take the plea deal because they don't have any more stuff being exposed, any more crookery, right? So here's a list of the cases that we found on Pacer. You can just go to Pacer and look this stuff up. It's the federal court system, and you can just make a free account on Pacer and look up these cases. But this is the Securities and Exchange Commission versus Marco Santarelli, the SEC. There's that case. There's the United States of America versus Marco Santarelli. And that, I guess, is the criminal case versus the SEC being the civil case, I believe. And then American Express National Bank versus Marco Santarelli. Now, I don't know the details of what happened here, but what I understand is there were a bunch of credit card charges as part of the alleged Ponzi scheme. So that's part of it. There's Roberto Madero et al. This is probably a bunch of the investors against Marco Santarelli and Narada Equity. There's just a bunch of other cases here. So you can see all these, and these amount to how many? This is, wow, 21 lawsuits. Okay. There's the criminal case, and then there are these other cases as well, 21 of them. That's just shocking. This is what happens when you trust the wrong people, folks, and you want to be a direct investor so you are not susceptible to this type of thing. And a lot of people have asked me for documents on the case. They've asked me for more information on the case. We'll get that to you some way, but you can just go on Pacer, okay? Just get a free Pacer account. It's the federal court system's website where they've got these things, but, we can get them to you as well, possibly. So here is the SEC case against Marco Santarelli, and this is the consent. This is the plea deal. It says defendant has pleaded guilty to criminal conduct relating to certain matters alleged in the complaint in this action, specifically the United States versus Marco Santarelli, and then there's the case number. Defendant pled guilty in a sealed plea agreement. See, we don't get to know, right? Docket number 8 in this action. This consent shall remain in full force and effect regardless of the existence or outcome of any further proceedings in United States versus Santarelli. I guess the sentencing will be, I believe, March of next year. So we're going to know something about that plea deal. Yeah, there's just a lot here, and I'm not a legal expert, so I can only tell you certain things. But you've got Santarelli's signature on here. It's notarized. He was just in court on Monday about this case. So there you go. That's kind of the scoop. And this is why, folks, you should be a direct investor. Don't leave yourself susceptible to crookery, stupidity, or illegal business, right? Where they're just skimming the profits off the top. And there are so many of these syndicators and so many of these fund managers who will never be caught. Okay? It has to be just an egregious scheme like Bernie Madoff, like Marco Santarelli, like the others like this, to get caught or have any consequences. Some of these people will just operate their whole lives. And this is, I think, the biggest thing. It's the money laundering. Now, I don't mean like criminal money laundering, right? Like a drug smuggler launders money, to clean it up, right? And then use it. And what was that show? It was on, I think it was on Netflix. I used to watch that show a couple of years ago where it was like the money launderer. It was interesting. You probably know what I'm talking about. But what I mean is they've got all of these different entities, and the entity that they raise money from the investors is now using those investor funds to pay like their property management company, to pay service providers that they own and control and they set up to basically launder the money out of the main entity, out of the pockets of the investors, to steal that money legally, right? And pay their management company, their construction company, their whatever service provider company, to pay for their private jet, to pay for their meals and entertainment. You can get away with all of this stuff. And that's why you don't want to be susceptible to this. Be a direct investor. Just buy some houses. Keep it simple. Be in control of your financial future. Do not violate commandment number 3. Okay, so I think that's it for today. More to come on all of these stories and all of this stuff, but we are here to help you build a nationwide real estate portfolio, whether it be one property that you buy every year or 100 properties you buy every year. We've got clients just starting out, and we've got clients who are experienced in buying lots and lots of properties and going big into the investment world. We can help you. Just reach out. We've got great properties. We've got notes. We've got co-living properties. We've got all sorts of tools and software to help you be very successful as an investor. So just reach out through jasonhartman.com or call us 1-800-HARTMAN, like we talked about. Not that you need a toll-free number, but it's easy to remember. Or 714-820-4200 and press extension 2. Get with one of our investment counselors, and they'll be glad to help you do a free portfolio makeover, which will show you the highest and best use of the assets you have so that you can get the highest return and make your money work for you. Until next time, happy investing.